just a little bit about us before Okay, so I'm an investor with SoftTech VC. We're a micro VC fund located here in San Francisco and down in Palo Alto as well. Investing in funds that are less than $100 million. Our average investment size is around $500,000 to $1 million. And we typically syndicate with other seed investors. So we do both a mix of B2B and B2C, a lot of marketplaces, a lot of SaaS, a lot of mobile services infrastructure, and a lot of connected devices these days. So today I'm going to be talking to you about market sizing and competitive landscape. So we'll jump right into market sizing. So there's three things that investors look for, and we at SoftTech like to talk about our 3 asses rule: a smart-ass team, a kick-ass product, building in a big-ass market. And so I'm going to focus on this big-ass market. I think we probably talked a little bit earlier today about some of the product and team stuff. But at the end of the day, you need the market to be there if you want your venture to be venture backable. So how big does the market need to be? Well, $1 billion. So there's a big enough stress test that we typically do as investors, and that's, are you operating in at least $1 billion market? And the reason that we do that is when we think about your startup in the context of the broader market, we like to understand if you were to own a certain percentage of that market, how big would your market, how much market share would you need to have to reach a certain point in that market? So my expectation for a venture backable company is I have a good understanding of what that company needs to look like in 3 to 5 years to be earning $100 million in revenue. Now, if you're operating in a $1 billion market, that means you've captured 10% of the market. That's significant, but it's not unfathomable for me to recognize. If you're operating in a $200 million market, you're telling me that you're going to get to 50% market share. That's a lot harder to do. And it's not necessarily a company that I, as an investor, can feel confident backing to build the big IPO company. The second thing we're looking for when we think about big-ass markets is, are you building a company, not a feature? You've probably heard this before, but a lot of times we think about features that go into products that go into companies. So we're looking for things that can stand alone on their own to really get to that $100 million revenue mark. And I write on here on my slide here that by raising capital, you're committing to match the return expectations of the investors that are invested in you. So if you're seeking venture backable funding or venture funding, then you need to be targeting a market that is large enough to provide outsized venture returns. Okay, so there's 3 different market types that companies operate in, and you need to figure out when you're pitching your company and thinking about market sizing, which one of these you're operating in. And I think I heard Noah talk about this a little earlier. There's existing markets, like the yellow page market, I think I heard him say. These are markets where it's pretty clear you can go out and gather some numbers around how much money is being spent in that market, what that market looks like today, and who the incumbents are. Your idea as a founder in that market is to build something that's better, that's faster, that's cheaper. So you're capturing existing share from an existing market. The second one is resegmented markets. And this is somewhat in between the net new market and the existing market. And these are markets where there's fundamental shifts going on, where dollars may be shifting from one place to another. It could be because there's new technologies that are enabling this to happen. And again, these may feel niche in the beginning, but you're talking towards trends that are going to make this happen. And the third and the hardest one to size, I think, is what we call this brave new world market. At SoftTech, we were investors in a company called Fitbit back in 2008. When the firm invested in Fitbit, there really wasn't a market for wearable devices. These days, we now know there is a market, but we had to, as investors and as founders, take a big leap of faith to look at some trends and speculate if a product like that was to enter the market, how many dollars would be going after a product like that? So there are opportunities, obviously, to create net new categories, and I still see this today in a lot of hardware. So figure out which one of these you are, and this will help you in terms of thinking about how you're going to talk about the market size. Yeah?
In your VC deck, need you state explicitly that it's existing market versus new versus resegmented?
No.
Or do you expect people to...
I would expect people would understand, and that's just something that you'd be talking about. But these will help you understand. The reason I break these out is simply because in existing market, there's going to be a lot of data out there. around your market. So you're going to share that data with the investor because you're going to want to do a lot of the heavy lifting for them. We'll go and do our own research. But as you move further along this spectrum here, this new market, a lot of the onus of explaining why that market is going to be big and $1 billion when it doesn't exist today falls on you as the founder. Right? I have to have the belief and conviction in that possibility, and a lot of that belief and conviction comes from you. Okay, so I'm just going to draw this up on the side. So let's think about breaking down your market and how we think about how you're going to explain your market to the investor. The first thing you're going to do is you're going to define the underlying problems and the needs that you're solving for your customers. Right? So you start by defining what it is you're going after. So who has this problem? What do they look like? How are you helping them? This is identifying your customers, right? One thing I always think is really important that a lot of founders overlook, at least initially when pitching, is are your users actually your buyers? So I invest in a lot of ed tech companies. In many cases, my users end up being teachers or students. But the buyers of those software solutions are often case administrators. So the person writing the check is very different than the consumer. It's the case with a lot of HR software too. A lot of times the users are actually managers that are hiring, but the buyers are the HR department. So think about that and what those customers look like and what their budgets look like and how they think about their budgets. And once you kind of have a good idea of the problem you're solving and who you're solving that problem for, and then who has the willingness to pay for that problem, you can then begin to get into, okay, let's try to figure out how big that addressable market for my product is. So, your addressable market equals the number of potential customers out there and the lifetime value of those customers, right? So what's the market you're going after? What do you expect your share to be? Again, if you're offering a new product in a net new market, maybe it's feasible that you'll capture a good chunk of the market to start, right? If you're entering a market with incumbents, you're going to slowly chip away at those incumbents. So how big of a percentage can you chip away? How fast? And what's the overall growth potential for the market? So this goes back to, are we seeing dollars shift out of one area into another? Are you in a market that's growing rapidly? I invest in a lot of e-commerce companies. 10% of e-commerce is growing 10% year over year. So I know that as a whole, that pie is going to grow. And the same can be true for a lot of other areas. So there's two ways to actually size your market once you get into it. You've probably heard people talk about top down and bottom up. I'm going to quickly walk through both of those methods, and I would actually suggest you think about both of these methods when you figure out how big your market size is. And this may be an exercise you'll do on your own. You may actually present the market as a certain size when you pitch an investor in your slides. But when I start to drill into it and want some backup, your thinking here is going to be very important. And in many cases, when you're talking about a market where, again, that market sizing is not as clear, where I'm carving off a niche, or where I'm entering a new product category, well then you may actually want to do this. So top-down market. The way to do this is a lot of industry analysis, right? So you can go out there, there's analyst reports, there's lots of market data out there. Begins with a Google search, right? Begins by getting your hands on some of those expensive reports. Begins by talking to other people in your area and getting a sense of how they size, what they've read in sizing that market. Once you have, so the example I have here is, let's say we're looking at online commerce for children's clothing. So there's and we're just going to focus on the U.S. So first you're going to break it down by geography, right? So I'm only going to focus on U.S. I'm not focused on global. Next, I'm going to go down to the industry, the product category. So it's apparel. And then I'm going to further segment because I'm not actually building a company and targeting men, women, and children. I'm building a company simply targeting children. So now I care about total children's apparel in the U.S. And then I think about the percentage of that that's online. And that's how I actually get to my total addressable market size. Now, you're also going to apply some sort of factor of saying that's growing at 10% year over year. And we expect that, within the next 5 years, that 50% of children's apparel sales are going to shift from offline to online. But your total addressable market is not the entire U.S. apparel market. It's the U.S. apparel market for children's clothing online, if you're building an online company targeting children's clothing. And that total addressable market is only if you capture 100% of the market. So as you kind of begin to whittle down, you continuously have to ask yourself, is my market big enough? And as you see your market dwindling away, maybe there's tangential markets that you'll need to address to be a big enough company. And you'll have to think about how you'll continue to get more dollar share out of your customers. That's a top-down approach. You essentially start with a big number and you whittle it down based on the number of factors. Yeah?
So with the TAM, for that example of online kids apparel, would you then say that if you're an e-commerce retailer that you should be able to hope for a margin of say 20%? Because presumably a lot of the numbers actually going to be revenue numbers, not.
Absolutely. I mean,
So
yes.
then, yeah,
So then you whittle it down further and further and further. But I think when we think about e-commerce, we're looking for how do you as an e-commerce company get to be $100 million in top line revenues?
Yeah.
And then we know you're going to take a hit from a margin standpoint.
So you guys are valuing the $100 million as the top line revenues, and the fact that 80 or 90% of that's going out to supply.
We recognize that. We do a lot of marketplaces, we recognize that too.
Yeah.
Those are obviously elements we're going to take into consideration when we evaluate an opportunity. So our threshold in a SaaS business where the margins are a lot better versus an e-commerce business are going to be very different. But I think as a rule of thumb, and it's hard to, in this room, the range is really big. Minimum though, it's got to be $1 billion market, right? And I would say that, the bigger the market is, the more enticing it is. But sometimes we get hit with people, this is this is like, a $60 billion market. Well, okay, it's a $60 billion market in all educational software spend. But let's actually get down to K-12. Let's get down to what's actually, used in the classroom versus, what's done outside of school. So that's where those numbers also get tricky. Yeah.
For growth, do you look at proxies when you don't have very established categories of funding?
So I'm an early stage investor. So I'm not actually, the stage that you're meeting me, you probably have minimal, if any, revenues. And there are some proxies out there in terms of how I know how the typical growth rate I expect to see for a SaaS company, for example.
Right, I meant market growth, not necessarily.
Growth of your market?
Right.
Yes and no. I mean, I have a good sense. There's markets that I'm interested in looking at today because I see growth trends in those markets, for sure. But I'm not generally applying much of a growth factor to the stuff I'm looking at. That's how, I would suggest that you think about how a market is growing if you're working in a small market, but for a smaller growing market. So again, back to that wearables thing. How many connected devices are we going to have in our homes? Do we believe that there's going to be a lot more money flowing there that wasn't flowing in the past in home automation? I do, right? So I may, in a category like that, think about growth. In other categories, it may not matter as much to me. It's case-by-case basis.
Yeah, it's related. So what if your startup is trying to shift dollars away from one area where it's being spent and into a new area, for instance, it's not being spent on software now and you're trying to move it?
Sure. So again, I think you have to kind of think about, that's a proxy case, right? Which is, so let's use the HR example. HR is spending in some way to acquire candidates for their company. It may not be on software today. Those dollars have to come from somewhere, or their budgets have to change. So thinking about where those dollars come from, or what does it take to make those dollars begin to appear, is there going to be an income shift, right? I mean, like there's a stat out there I think it's in the accessories market, is that every time a new iPhone comes out, the accessories market experiences a little bit of a dip for women because their dollars are actually shifting from one category to the other. So yeah, I think it's feasible to say, where are those dollars? I always ask that question, where are those dollars being spent today? Where are they coming from? It's a little different with enterprise versus consumer though.
Yeah, so if, say the market is $1 billion, if you take a lot of it could be bigger, but people are currently priced out of the market by the current offering. How can you present?
That's up to you to present that.
Yeah.
It's up to you to create a feasible case for me to believe that people won't pay whatever $100, but if everybody pays, but everybody will pay $10 for this.
Yeah.
I may or may not believe that. And that goes back to, quite frankly, my first slide, that kick-ass team, or the smart-ass team building a kick-ass product. A lot of my believing in your ability to tackle a market that isn't big enough or doesn't exist today goes back to the product and goes back to the team. So, and those, I think, are the most important pieces. The market is kind of the easy part. The market's either there or it's not, or you convince me that you're going to get that market will be there because of the amazing thing you're building. So that's the top down. I want to jump over to the bottoms up. Oops. Can I do that? Okay. So bottoms up is the other way, which is to say we're going to start at the very base level and we're going to take a look at households, right? Or, again, number of HR executives or number of schools. So in this case of the kids e-commerce company, I'm going to start with the number of households with children under a certain number, the number of children in the U.S. And I'm going to say that on average, each household is going on their 1.2 children is going to spend a certain number of dollars per year, and then I'm going to get my total that way. So these numbers are generally not going to be completely exactly the same. It would be very strange if they were. However, they should be reasonably close. So I think that's the most fair way to say that, I like to do the bottoms-up approach personally because I think that gives me the most tangible way of saying, how many customers do we need to have? How much do we expect those customers to buy? How many customers do we think we can acquire, right? But does that match up with the expectation of what you're telling me the market size is? If you're telling me that you're operating in a $5 billion market, and when I do a bottoms-up approach, I can only get to $1 billion market, you're really off. If you're somewhere between, 4 and 5 for each of those, yeah, that's pretty feasible. We've gotten to about the same place. So they need to be relatively close in order for me to believe that, yeah, okay, the market research makes sense, but then the logical explanation of how you build that market also makes sense. I think is there a question?
Yes, in your VC pitch, would you first talk about the business model and then talk about the top-down market size?
So that just depends. I mean, I'm not. I don't know if anybody's talking about exactly how to structure your pitch today.
But in terms of people being able to understand,
that varies from business to business. There are some businesses where people may upfront talking about the size of the market makes sense. In other cases, it may be really important to talk about how your product makes money before you tell me how big the market opportunity is. Pitches are stories, and it's about being a good storyteller. And so if you can be a good storyteller, I don't think it matters where you're building an arch for me. And so there's a logical place in your pitch as a good storyteller where all of this stuff belongs. But for me to say, oh, that should be slide 1 versus slide 5, I can't do that. It really depends. It really depends. In some cases, like the big market is what gets some investors excited. In other cases, it's not. Right? So that's how I'd suggest thinking about sizing the market. The reality is I'm going to do something similar on my own. So you as the founder, the onus is on you to provide me with the initial data, right? You provide the starting point for me. You're an expert in your market more than I'm an expert in your market, most likely. And so therefore, you're going to give me some direction as to how you size your market. You're going to give me some thought around how you think about breaking it down from a number of customer or number of user standpoint. And then I'm going to go out there and do my own research and kind of build my own little back of the envelope or Excel model and take a look and see. In fact, what I do half the time is when I look at a model, I just cut the numbers in half. Like if I just cut the numbers directly in half, how big can this company be? And it's just a stress test that I do because again, you and I probably both know that early on, the numbers that you've put out there are guesses at best, right? And my guesses are guesses at best too. So that's how I'd suggest comparing. A couple other tips. Again, this goes back to this. At the end of the day, I think the word that matters most here is probably bullshit, right? So if you know who your customer is and you know what their needs are, it's a lot easier for you to do this market sizing stuff, right? Like you understand the market nuances. I say don't be careless. Like if it's very easy for me to go out and find a number, and the number you have is factors away from the number that like I can find in 30 seconds, there's probably a bit of a problem. With new markets, new customers, new use cases, new products, you're talking a lot more about trends. You're talking a lot more about timing. Timing matters a lot. So you could have built you know, if you look back at the history of companies that have been, you know, popular over the years, there's usually a company that comes a few years out, or, you know, a few seasons out, where the market isn't quite ready to, whether it's, you know, get a ride on their mobile phones or put personal information on a social network, right? So your market timing matters just as much. Like, is the market ready for what you're offering? You're going to have some assumptions about how quickly people will adopt things, who the early adopters will be, at what point you will begin to sell to a more mainstream customer if you're doing a consumer product. So I like this home automation example. You know, there's going to be a lot of, you know, early adopter tech junkies that will that have started to do this in their homes. At what point will it be just natural for us to walk down an aisle of Home Depot or Lowe's, and when I'm replacing my doorknob, I don't even think about buying an old doorknob that isn't smart. I only think about the market of smart doorknobs. So, where are we in that trend, and where is your company for in hitting that trend too? So I'd say that basically when you're market sizing, it's a mix of creativity and basic algebra and an educated guess. So the point is that the number you're going to say is not exact. The number I'm going to come up with is not exact. But what I'm looking for here, just like if I'm looking at your business model, is I'm looking to understand how you think about the market that you are building a company in. Have you thought thoughtfully about how big it is, about what percentage of that market you're going to have to carve out to reach a sizable amount of revenue? And that's really what we're looking for. So size matters. The other thing you shouldn't overlook when you're thinking about market opportunity and attractiveness is things like competition, which we'll talk about a little bit later. Monetization potential. So it's great if there's, you know, millions or billions of users for your products, but is there a way to monetize the product? And you know, for every Instagram, how many photo sharing apps out there, you know, don't live to see another day, right? So again, we talked a little bit about market growth. How quickly is your market growing? Is your market growing? Is your market shrinking? Is your market changing an awful lot? Market share. So who are the incumbents you're going after? Do you have one giant incumbent you're going after? Do you have a lot? Are you in a really fragmented market where no one has the majority of market share, and a new company in a very fragmented space could actually have a chance to stand out and capture market share very quickly? And then again, timing. You know, are people ready to use a product like this? Is the market ready for it? Do they have the infrastructure in order to utilize it properly? Okay, so that's it on the market sizing stuff. Before I jump into competitive landscape, any questions I can answer?
If two people have the same presentation hypothetically, and one person can deliver it in a way that convinces you, and another person does, how do you know that you have a weakness as a person? How do you choose rationally? Like, I will go with this person for it.
Well, if all else is equal, if I'm looking at two exact same pitches, and one CEO comes in and is convincing, and the other CEO comes in and is not convincing, probably going to go with the CEO that's convincing. And that's because at the end of the day, your job as CEO is to convince investors to give you money, it's to convince employees to join your company, it's to convince customers to buy your product, it's to convince partners to help you with distribution.
What is not convincing for you? What kind of person qualities is not?
So you know what, we're gonna have to table that question because I don't think it's necessarily related to the market sizing stuff, and I want to make sure we stay on topic. It's very hard for me to say what is not convincing in an individual pitch. There's a lot of nuances to it. Yeah.
So we have a complex financial market or
Sure.
model, right?
Yeah.
And we have lots of different assumptions. We've always erred on the side of going on the shorter range.
Yeah.
If you're just dividing like two at the end of that.
No, because when I say that is, the reason when I say the body guard, so it's not with your market size, but like a lot of times if you give me your your conservative approach, how you think the company is going to have revenues for the next year or two, right? Which is generally what you're doing at seed stage. I'm going to make some assumptions that your launch is going to be delayed, that the first channel that you're going after is actually not going to be as effective as you think it is. It's going to take time for your campaigns to ramp up. So that's why I do it. It doesn't necessarily mean that I don't believe you can get to what you're telling me, but I also know that shit happens. Right? Like, shit happens. And I mean, and you all know in this room, it just happens. And so, you don't know when, your biggest rival is going to announce something the day after you launch, okay? Or the day before you launch. So I take a look at that because it gives me the chance to say, okay, reasonably thinking in the next, especially because if I look at a plan, I know you're going to raise about a year to 15 months after my investment goes in. You'll raise about 18 to 24 months of capital, ideally. So you'll have a bit of flexibility before your next raise. So I have to think about, like, what's the company going to look like in about a year's time where you go out to pitch as well? And is that big enough to give me proof points to believe that, like, somebody else is going to get excited? So I know it's not a perfect answer. When I say I cut things in half, it doesn't mean that I don't believe your numbers entirely, but there is a lot of, okay, I have to get to this number. How do I build a model that gets me to that number? But a lot of the things that go into that model have to be untested. And all of that changes if the company has been, I meet plenty of SaaS companies that are bootstrapped and are doing 20K in revenue by the time I meet them. And, their models may actually be a little bit more feasible to me because they've begun to figure things out, and I'm seeing some predictability. If you're only a month or two into or a couple months into your data, and it's very lumpy, then it's a lot harder for me to believe it. All right, so I've got about 10 minutes, I think, so I'm going to quickly go through this competitive landscape. So when one of the things you're going to do when you give a pitch is you're going to obviously talk about the market size and who's in the market, and then you're going to get into this competitive landscape. And so you probably have a slide that looks like this, right? Or you have a slide that looks like that. Or if you were reading Steve Blank recently, I've seen a lot more of these. I don't really care how you make it look. That one of these may actually be the right thing for you because it's the most easy or visual way to display the context. Here's what I'm looking for, and here's what I think is important. Your job when you talk about competition is to explain your startup in the context of the environment in which you operate. And that includes the people that you partner with, the people you compete against, and the people that keep you up awake at night. Doesn't mean every single one of them goes on the slide, but this is the total environment that you're operating in. Some of the folks in your environment may be partners today, competitors later, or vice versa, right? Some of the folks in your environment may not be doing what you're doing, but you suspect they could. And then, of course, there's always going to be people that are directly competing with you. But every company has competition. Every single company has competition. Something else is competing for your customers or your users. Something else is competing for their time, for their dollars. So what is the alternative to what they are doing for you? Okay. So when you talk about your competitive landscape, it really begins with thinking about the macro business environment that you're operating in. So how would you put yourself in the context of other companies, maybe historically, today, and where do you think companies will go in the future? And what are the things that your company offers that set you apart? So, and this is the SWOT, I think I was the next one. So in other words, maybe you are smaller and you have fewer dollars, but the engineering talent you have in your team is exemplary and pulls from some of the best companies in the Valley, and you guys are really the experts in what you're building. And so while people may be able to build this, you actually are primed to build it better. Right? So you're thinking about kind of that whole big picture of where you stack up relative to the competition, as well as who may be there in the future. This doesn't necessarily go on a slide, but this is stuff you should be thinking through, because as we're having a conversation when we sit down, I'm probably going to ask you, well, where do you think the market is going? And how do you see yourself competing if X comes into the market? Or, well, we know that company X, Y, and Z. Oftentimes, I can point to companies in my own portfolio that started operating the business in one realm, and then pivoted because they had difficulty scaling a business in that exact area. And then I see a new company come in doing the same thing. And so, well, this company struggled with scaling the business in this manner. What makes you think it's going to be different today? Right? And it could very well be that, your execution strategy is different. It could be that, again, the market is ready, right? But those are the things that we'll be thinking about. And so having answers for that, being aware of people that have done what you've done in the past and why it has or hasn't worked is always important. And then obviously you'll talk about, like I said, your competitive advantage, what makes you guys strong. So when we talk about like the macro business environment, we're talking about things like economic and political trends. So again, I'll go back to my ed tech example. I invest in a lot of ed tech companies. Common Core being rolled out around the country certainly presents a lot of opportunity for founders focused on things like assessment. Cultural and social shifts. One of the areas I'm really passionate about investing in is aging. And if you look at the aging baby boomer population and the fact that you've got a barbell generation who's caring for their kids as well as their aging parents, who live from their aging parents, well, there's an awful lot of things happening from a cultural and social standpoint where there could be opportunities for companies to really take advantage of that big shift. Obviously, technological innovation is a big area, right? As chips get smaller and smaller and smaller, we now suddenly can automate more things. And then obviously the regulatory and legislative environment are going to either inhibit or create new opportunities for business. Right? Look at all the crowdfunding sites. The second thing to think about when you're doing this sort of competitive analysis is to think about the ecosystem surrounding your company, right? So this environment. So obviously your competitors, direct, indirect, people that might enter, suppliers and partners. So we invest in a lot of hardware companies. One of the big questions that I always ask hardware founders is, what's the limitation on your manufacturing? What's the limitation on your supply chain? If you need to jump from producing 10,000 units a day to 100,000 units in 3 months, is that possible? Right? So it's not just you, but it's also all the inputs going in. Same thing if is it possible for you to hire the types of engineering talent you need to hire, where your company is located? That's a challenge I think a lot of companies face when they're outside of specific markets. Is they can build their initial core team, but can they hire the 100 engineers they're going to hire? Is there some sort of filter system there? And then again, substitutes and customers. So what do customers want? What are they purchasing today that they could be purchasing instead of you? So just understanding all of the kind of players in the ecosystem around you. Right? Who are the people that maybe provide you with data that actually enhance your product, things like that. Okay, so then I have this thing about this ecosystem slide that I think is good for some companies, and you'll see these from time to time. I think there was another one around the mobile services that Steve Schlackman from New York just did this last week. The ad tech one, a lot of people know. But basically, if you're operating in a market that is fairly complex, and ad tech is a really good example, there's an awful lot of players in it. They all do a lot of very nuanced things. Sometimes explaining where you fit in the broader ecosystem is important. Because you may tell me, oh, I've partnered with this one, and this one, but sometimes you sit down as there's a customer, oh, aren't you competitive with such and such company? Well, no, actually, we're not. We're actually partners. Let me explain why. So if you're starting to hear a lot of questions from investors or just anybody you're talking to about the company, where they think you're actually a competitor to someone, when in fact they provide a distribution channel for you, or they're a partner of yours, then think about how you present what you're doing in terms of the broader ecosystem and where you fit in the ecosystem. Because not everybody that's in your ecosystem is actually a direct competitor. In many cases, they may actually be people that are helping you grow your customer base and grow your company. I also write this scary to investors. A lot of times, there's categories that are emerging categories that investors say, oh, I don't invest in X category. So explaining where if you know an investor has sort of a challenge with your particular market, sometimes providing additional context can help them. If an investor doesn't get your market, though, it's actually pretty hard to convince them. If they just continuously don't get it, it's pretty hard to convince them to get excited about it. Okay, so when you do a competitive analysis, you want to think about things like how's your product or features different in your product? how are your customers different, what market share do you have relative to your customers, how do you distribute, right? You know, do you have a inside sales force? Do you have a field sales team? Is it you know, a freemium model? Is it, you know, the customer signs up on their own? So those types of things. How is your technology differentiated? What's the pricing? What's the pricing of your competitors? And then the other thing I added here is resources. Are your competitors well funded? And that is one thing that, I think I'm going to slide on that in a little bit, but are your competitors well funded? The reason I ask that is, you know, as we look at companies to fund, we do have to think about the follow-on funding trajectory for those companies. And if I know that a lot of dollars have gone into a company in your category, and they are well funded and have the ability to continue to hire and acquire customers, and you're just starting out, and there's not a lot of other investors that are able to invest in your company because they've already invested in company X, Y, and Z in your category, then it's really difficult for me to put dollars into your company because I don't have a clear path to follow on funding. So I think you guys have the whole slide thing, but this is just really quick. The one point I'll make on the SWOT analysis. The SWOT analysis is if you think about your strengths, your weaknesses, your opportunities, and your threats, and you guys think about this stuff every day as founders. But I think, frankly, the most important thing on here is execution. So, end of the day, what really matters is your ability to execute. So you can walk into a meeting and talk to me about how you're different than your competitors. You can walk into a meeting and tell me how your market is huge. But it's your ability to execute that actually is going to get accepted. It's traction in your market. So just, you know, I'll answer your question in just a second, so I can get through. So just a few more things. You want to think about what are barriers to entry. So if you're entering a market, is it easy for other people to enter? Will you face likely a lot of competition, or are there things you can do to create a sustainable long-term advantage for your company? And then don't obsess about your competition. Be aware of them, understand what they're doing, keep an eye on them, but don't lose focus on what's really important, that's growing your company and the customer that you're working with, right? In some cases, a little bit of healthy competition is good. You know, I think sometimes healthy competition proves that there's a market for what you're doing. And so I'm just going to end on this note. From my perspective, if I ask who you're competing with today, I might actually be meaning, you know, how are you different from the 15 other companies I met in the last 2 months that do the exact same thing? If I ask who you'll compete with tomorrow, basically like, you know, when does Facebook or Google or, you know, whomever else do what you're doing? Because there's a, you know, a big, you know, 300-pound gorilla in the room. And then when I tell you something like, well, so-and-so just raised $50 million from these 10 firms, you know, how are you differentiated? That's scary, right? It's like your competition is really deep pockets. Who do you think will help you build a company in the future? You know, as a seed investor, you know, I'm relying on the later stage ecosystem just as much as you are. So who are the people that would not be conflicted out? How do you think about when you're building that big company? And that's it. So I'll answer one question and then I have to kind of step back.
Yeah, sorry, all these amounts to a whole lot of stuff. So if you start putting in the ecosystem slide, SWOT analysis, etc. So
they're not slides. So maybe I should just clarify. You'll put in a slide about your competition and some, maybe 2 slides about your competition. You'll put it in a slide or 2 slides about market sizing. But what this was meant to provide you was a way to think about how you arrive at those 2 slides.
yeah, but my question was, when do you expect to see this? Because it looked like you with like 50 slides, you were going to read them, right? So when is it that you want to see this?
When is it that I want to see?
First meeting, second meeting.
So typically when I meet with companies, you know, in the first meeting, you'll walk me through your pitch deck, probably has somewhere between 10 and 15 slides. Maybe it has an appendix if you have a lot of data, but as a seed stage company, it's probably not. You'll give me a demo of your product. You'll tell me a little bit about how much you're raising. You'll tell me about your team. You'll tell me about, you know, what your product does, what market you operate in, who your competitors are, what your distribution model looks like, a handful of other things. That's what you'll do. So, you know, this is and I think the point of today is to help you think about constructing your pitch. There's a lot of work that goes into creating each and every slide. Each and every slide probably has, like, in your mind, 10 slides of backup for how you got to that point, but you're not going to tell me all of that. But some of that's naturally going to come out in conversation. Does that make sense? Okay. Cool. Well, good luck, everybody. Thanks for having me.